Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. In recent times, significant developments have been unfolding in Iraq, leading to a surge of inquiries from people who are closely following the situation. These inquiries often touch on the country's economic condition, particularly concerning its oil revenue and currency valuation. It's important to delve into these aspects thoroughly to understand the broader implications. Iraq's economy is heavily reliant on oil exports, which constitutes a substantial portion of its revenue. The price of Brent crude oil, a major benchmark for global oil prices, has recently been fluctuating. As of the most recent data, Brent crude is priced at approximately $74 per barrel. This figure is crucial because Iraq's national budget is partially dependent on oil revenue. When Iraq set its budget, it projected the cost of oil at $70 per barrel. This projection is a key factor in determining the budget's viability because it helps in estimating the anticipated revenue from oil exports. If the actual price of oil falls below this projected price, it can create a budgetary shortfall, as the revenue from oil sales will be less than expected. In the current scenario, the price of Brent crude briefly dipped below $70 per barrel. This situation is concerning because it suggests that Iraq might not be able to generate the expected revenue from its oil exports, leading to potential financial challenges. However, the price has recently rebounded and is now above $71 per barrel, which is somewhat reassuring but still below the $74 mark. When oil prices fall below the projected level, and if the revenue generated from oil exports is insufficient to cover the budget, the government faces a difficult situation. A budgetary shortfall can lead to several financial challenges, including the inability to meet fiscal obligations, fund public services, and support infrastructure projects. To address such shortfalls, the government may need to explore various measures. One potential option is to adjust financial policies, including considering changes in currency valuation. Currency devaluation is a process where the value of a country's currency is reduced relative to other currencies. This measure can be used to address economic pressures and improve competitiveness. The potential for currency devaluation in the context of Iraq: if the government is unable to cover the budget due to lower oil revenue, it may consider devaluing the Iraqi dinar. Currency devaluation can have several effects on the economy, including inflation. Devaluing the currency can lead to higher prices for imported goods and services, contributing to inflation. This can affect the cost of living and purchasing power for citizens. Export competitiveness: a weaker currency can make Iraqi exports more competitive on the global market. This could potentially increase revenue from exports, including oil, by making them more affordable for international buyers. Economic stability: devaluation can impact overall economic stability, including investor confidence and financial markets. It's a complex decision that requires careful consideration of potential consequences. The discrepancy between the budgeted oil price and the actual price impacts Iraq's financial stability. If the revenue from oil sales falls short of the budgeted amount, the government may face difficulties in meeting its financial obligations, including salaries, public services, and infrastructure projects. In such a situation, the government might need to explore various measures to address the budgetary shortfall. One possible measure that has been discussed in the past is the devaluation of the Iraqi dinar. Currency devaluation is a process where the value of a country's currency is reduced relative to other currencies. This can be a response to economic pressures and can affect various aspects of the economy, including inflation, import costs, and overall economic stability. When the price of oil falls below the budgeted level, and if Iraq's revenue is insufficient to cover its expenses, the government may face a dilemma. To address the shortfall, one option could be to devalue the Iraqi dinar to improve competitiveness and potentially increase export revenues. However, this measure comes with its own set of challenges and consequences, including inflation and a higher cost of imports. In summary, the recent fluctuations in oil prices and their implications for Iraq's budgetary projections underscore the delicate balance that the country must maintain to ensure economic stability. The interplay between oil prices and the national budget is a critical factor in Iraq's financial health, and any significant deviations from the projected figures can lead to economic adjustments, including potential currency devaluation. The situation remains dynamic, and continuous monitoring of oil prices and budgetary developments is essential to understand the evolving economic landscape in Iraq. The recent fluctuations in the price of Brent crude oil have been noteworthy. As of the latest data, Brent crude is priced at $74 per barrel. This price is above the projected budgeted price of $70 per barrel, which initially seems favorable for Iraq. However, the situation is more complex due to the nature of price volatility. At one point, the price of Brent crude dipped slightly below the $70 mark, causing concern. Although it has since rebounded to above $71 per barrel, this volatility underscores the challenges associated with relying on oil revenue. Price fluctuations can affect the stability of the national budget and create uncertainty in financial planning. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.